What's up guys, this is the liquidity. In today's video I'm going to be showing you guys a particular method I'm using right now to trade, and it's actually giving me a nice cash out and a nice risk to reward, right? So when I talk about risk to reward, and before now I used to make a risk to reward 1:6, 1:7, at times 1:10, but this particular method I'm trading right now, it's actually giving me 1:10, right? So I don't need to think much of it. Whenever I see a 1:10 and I see my confirmation, I'm went into the market, like stock in some trades and bank out some money from the particular chart, right? So I'm going to be giving you guys the scenarios of what I do right now, exactly how I trade them, right? So I'm going to be sharing my screen right now to show you guys exactly what to do, right? So as a day trader, what I do firstly is to go to the higher time frame, right? So you know and you understand that my videos is kind of like looking like a top-down analysis, which is like taking the trade from the higher time frame down to the lower time frame. So before we continue this video, if this is your first time, do it to smash the subscribe button, get notified whenever I drop videos as this, and without wasting much time, let's talk more on what I'm here to do, right? So you can see very well here that we have a series of a consolidation, and this is actually AUD USD, right? So I'm trying to like show you guys, I caught about 4 trades at this particular pair, and it's very simple, and this very method can actually pay out a lot of things, and if you're trading profit, you can actually win a lot way bigger than what you think with this particular method of trading, right? So initially what I trade is structured liquidity, but I have a particular new method I bring out myself to search and how to watch the chart, and very simple, and what to do next and what not to do next, right? So now I'm going to take you guys straight without talking much on it to show you guys what I mean by that, right? So firstly, as a day trader, you need to like watch this and understand it, put it on your own psychology way of trading, right? You might be a scalp trader or a swing trader, so I'm talking by my own particular way of trading. So as a day trader, I'm taking this trade from the daily time frame down to my entering time frame, right? So I initially told you guys on my previous videos that if you're trading or make your analyzing from the daily time frame, your entry zone should be around 1 hour 45 minutes and 30 minutes, and if you're taking your trade from 4 hours or make your analyzing for 4 hours, your entry time frame should come from 45 minutes down to 15 minutes. I don't do anything from 1 hour to 5 minutes, but in a way, if any day I feel like scalping trade, that is when I look into 1 hour down to 5 minutes, right? So let me explain what I mean by that. So as a day trader, I'm going to be starting from what? A daily time frame. So when we're on a daily time frame, the only thing I need to do here is work with my Fibonacci, and this is more of Fibonacci right now. So you can actually use this for your Fibonacci and get a particular entry and a particular level to target, and this can actually show you what to do if you don't initially know how to trade or find your buyers, right? You can actually use this particular method to get a bias and know what to do next, right? So I'm going to be diving straight to this point, right? So you can see very well that I have what we call external high and external low, right? So don't forget that this is actually a new method and a new way of me trading, right? So this is not all about knowing the previous structure or a previous break in market structure, right? But it's all avoiding. But I'm going to be using early structures on the lower time frame, not on the higher time frame. So the only thing I need to do on a daily time frame is what? Mark out a 3 key zone levels, right? So this is a 3 level that is going to be very much important, and you're going to take it and take it personal that whenever market comes to that particular key zone, it is very much 100% sure for market to take off or take in from there to get to your previous TP or hit your zone target, and it's very simple to give you a win rate, right? So with your risk reward, you can actually get a lot of what profit with this same strategy. So first thing I do is what? Mark out my external high and my what? External low. So after confirming my external high and low, so if you want to like check from the previous days to check your structures, it depends on you, right? But I already know what the trend is going to look like. So what I need is to what? Mark out the external high and the external low, which is what? For my main higher time frame, which is the most top time frame, right? So this is when Fibonacci comes in, right? So I take my Fibonacci and mark it from the high, which facing the direction where the market is pushing at that particular moment. So if I should ask you, what direction do you think this market is pushing and looking like at this particular moment? Many of you will say that market is bullish due to this previous break of structure here, right? So I'm going to show you guys how I use this to find a directional bias, and you can actually still use it for yourself to make a lot of money from it, right? So after marking out my external high and external low, so it means that my liquidities are guided. So I'm going to be trading in between this range, right? So this is a range pattern and range where I'm going to be making my decisions to know if I'm going to be going in for trades or I'm not going to be going in for trade. And mind you, this particular method takes time to form for you, so it means that you're going to be a successful person. You need to like work with patience. You don't need to rush your trades, and it's not all about scalping stocks. You need to like exercise and know what you're doing at this particular chart. And you should understand that after wasting time, you should know that this is a win rate that you need to make. So you need to like work with a particular lot size that's definitely going to be making you a good money for you to like make money from the trade, right? So now after marking out the external high and low, this is where Fibonacci comes in. So I take my Fibonacci up to this very level and draw it from this level, from the premium down to a discount level, which is what we are expecting market to drop based on what the directional bias is looking. To me, it's facing bearish. So it means that I'm going to be joining from the higher time frame, like joining from the top liquidity down to the low liquidity, or you call it the external high or the external low. So this is what I will do. So mark it out like this, and you can see that in previously I've already done that. Then the third key level we're going to be looking out for is the middle discount between the discount and premium level. So this is what you're going to be watching out for. So like I said earlier, this is actually the key levels you should be expecting market to give you a strong reactions, right? Either from the external high, the middle, or the external low, which is what the discount level middle, right? So whenever your market is reacting from your discount level and it gives you a particular structure, it means that market is going to be respecting at that particular zone, right? So and any other liquidity below it is going to be targeted. So I'm going to be explaining more on that, right? And in previously, right, I'm actually on trade on this particular chart, which is actually running currently, and I'm already in profit. I'm not going to be showing you the guys that. You guys already know how I trade, right? So now let's dive straight to the lower time frame. So this is only the three things we need to do on the higher time frame. Mark out the three key zones and delete your Fibonacci and get your trade started. So what we do here is to go down to the 4 hours time frame. So initially, we have to get your storyline, get ready of your storyline, or know where your directional bias is going to be. Like I always said, I check my directional bias from 4 hours time frame. So since I'm getting the key level from the higher time frame, so I'm going to be checking my directional bias on the 4 hours time frame. So what I do here is I wait for market to get to a particular level, or give me a particular structure. That structure tells me where market is going to. So now you can see very much here that market gave us a series of after breaking out from the third zone, we have a break of structure. If we had to be here, we could have taken a massive sell to the downside to the next level, but I don't trade it like this. So what I need is for the three key levels to be actually visible for me to know what to do. So what I did here was, after confirming that we have a lower low here, a lower high, and a lower low, a lower high, so you can see this structure building up on this particular zone. So right, I'm definitely going to be waiting for market to take out the last high of the downtrend. And market didn't take out this particular high, gave us another lower low here. If you can watch very well, we have another lower low at this particular spot. So we have another lower high. So before we have the previous lower low, before market takes out that particular old high, which we have right now. So this confirmed that the directional bias is actually bullish. So we needed to focus on buying at this particular spot. There is nothing else that is going to be causing us to sell at that particular limit, right? So this particular method, I'm still going to show you guys what I used it to trade on BTC, and I'm still on profit on BTC right now. So I'm trying to do it with a new particular trade, because I just entered trade on AUD USD right now, right? So I have a structure here. So next thing I need to do is target the next high. So how are we going to be going in for this trade? First thing we need to do is mark out the key level that is very visible on the higher time frame. So on this particular setups, or this particular way of trading, I initially add up something else to finding my key level, right? So now I'm using either a breaker block, other block, or fair value gap. So I just initially added fair value gap to my 3 key levels of using to find my a strong level to take me to the high or to the low side of the directional bias. But on these 3 key levels, you need to see it from your higher time frame. So what I can initially see from here is actually an order block. So confirming another block after the structural shift, so it means I'm going to be waiting patiently for market to return to my order block, and I'm going to be going down to the lower time frame to check if there's any other key level aligning together with the other block from the 4 hours time frame. That can tell that that's a particular key level market is going to react from. So let me show you guys how I was possibly able to get a trade from this, and I was able to cash out 2 straight win on this particular day. And let me show you exactly what I did. So now going to the lower time frame, like the 1 hour time frame. So this is where I'm going to be taking my trade and making my analyzing to check if I'm definitely going to be going for long or going for short. So you can see very much here after the structure has shifted from this particular zone. After the structural shift, you guys already know what I trade. So this is my inducement that confirmed that this is where the market is, and this is where the money is, and the banks are planning to come over to this very level, sweep the money and start moving to a particular level, right? So you can see very much here. Then if you go to the 15 minutes, this is another block. So after then I confirmed this and I took my buy from this particular ground, and market started moving to the upside. And at the same time, you can confirm that this very level is combined with this old breaker block, and it's all about combining together with the other block from the higher time frame. So after confirming that, I took a trade, and let me say you came here earlier and the market is already playing out at your particular key level. Let me say market have already moved on, and there's no way for you to get into this trade. There's much possibilities to join the trade even when the market have triggered from your higher time frame key level. So now what I did was I took another trade from this particular ground, which I confirmed a double break of structure, and I had my breaker block entry, inducement setup. Then I took my trade from the breaker block entry, and this gave me 1:12 risk to reward, and this first one gave me 1:10 risk to reward. And you guys can see what I mean by that. It's giving me a lot of confidence. This is a lot of confidence that market is definitely pushing to that very direction. And if you watch very well here, I have a lot of consolidations, but it didn't bother me. It didn't shake me to the extent of breaking even or making any strange mistake on my trade. Right? So now you can see I took another trade from this level, giving me 1:12, and I was able to hold it all the way to the middle line. This very line you're seeing right here is the middle line from the discount and premium level. So this is the level I had, and I targeted there, and immediately you can see market touched that very level with enough momentum. So I didn't take any other trade. I didn't even consider to look out for another buy or another sell. I needed to see something that will confirm this particular trend has changed or something is about to occur. So due to how the market is facing from the higher time frame, what I spotted here was a shift in market structure, right? And this is happening inside a premium level, right? So after a shift in market structure, I confirmed there I have what we call a breaker block. You might be wondering, where is my inducement? Inducement can be a single candle depending on the time frame and how the volume of the market was at that particular moment. So what I did here was I spotted this very little candle here. That is why I didn't mark it out. It's not really crazy. It's just a single candle which we have here. So this is my inducement. Then after marking out my inducement, this was the only breaker block that is very close. This was the key level very close to my entry, right, to my inducement. So I took my entry in there, and this gave me 1:10. You guys can actually see it on the system. This is actually 1:10. And where did I target? I targeted the next liquidity. So I told you guys initially earlier that if you actually have a trend line, any other liquidity you're seeing in between that level that you are trading is actually going to be swept. So we have this particular level, and that was why I targeted this very low, and it gives me what, 1:10, and that was a clean setup and a clean hit, right? So I have this very setup clean and settled, right? So I didn't even need to bother myself on it, and I made a lot of money from this particular trade setup. So you can see very well that I had what, I have a simple trade win at this particular week, right? Like I took a lot of trade from this particular trades, and it's very, 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 very simple and very smart to take. So now I have an initial trade happening right now on AUD USD, which you can see very much here that I had what, a tap on that particular key level point on the higher time frame. So this is from the middle time frame, so it's in between the discount and the premium, right? So the market touched the discount level and the premium level and rejected and gave us a shift in market structure, and that's why I'm dropping a sell from this particular level. So you might be wondering how come the market didn't give me a particular strong breakout. No, it gave me a particular strong breakout. If I should go down to the lower time frame more, such as 45 minutes, you'll confirm the market gave us what, a clean breakout level at this particular level zone, right? So you can see very well that we have this as a particular level of interest, right? So that was why market reacted from that very level, and you can see what, we are about to drop from this very level, and I'm not really scared what's going to be going out at this particular point. So it doesn't mean that it doesn't mean that you cannot hit LCL on this particular trade, but it's definitely going to be giving you a better risk to reward, right? So with your risk management and how to trade, you can actually make a lot of bank money from this particular setup, right? So now let me take you guys to BTC that I took today, and I was able to use this same method I taught you guys now on AUD USD. I was able to use AUD USD to explain it because this is the one happening currently. Like there's a new trade happening currently, so that you guys can actually see that yeah, it's definitely working as talked, right? So firstly, I came to BTC. You can see I only have 2 trades at BTC, and this particular trade was taken I think earlier this week, which is from the Saturday time, because BTC doesn't initially used to close. We don't close on BTC, you guys know that. So from the daily time frame, I'm going to be taking you guys to daily time frame. So we have what, we have a simple guidelines here, which we have this external liquidity high level and external liquidity low level here, right? So what I did next is what, take my Fibonacci and draw from the high of the level down to the last external low, right? Marking out my Fibonacci gap level. So this is why I have a 3 key zone, right? So this 3 key zone is where I'm expecting a strong reaction from the market side. So it's giving me a lot of confidence that once market is on this key zone, I should expect something like this, and once market is on this key zone, I should avoid something like this, right? So now market gets back into the key level. So firstly, I had a first sell, I have a buy on this particular setup. Now let me show you why I took the buy. So like I said initially, that we must see a trend that shifts structure from the 4 hours time frame that confirms that okay, we are about to target the 50% discount level or the premium level, right? So what I had here was what, a downtrend coming to the downside, and initially I have what, I have a simple setup here, which I have a lower low, a lower high, a lower low, a lower high, a lower low, another lower high, and a lower low again, a lower high, before what, market gave us a lower low and then finally shifted structure to the upside, which you can see very much here. Here confirms that what, I'm definitely bullish. So anything else that is going to be what, taking me out on SL should be manipulation, right? So if manipulation should happen, I should not bother about it. It means that the next one is definitely going to be entry. So with this particular method, you don't even need